US Supreme Court struck down Trump's sweeping global tariffs imposed under a national emergency law with a 6-3 ruling. A few hours later, Trump announces new 10% global tariffs on all trading partners. Tariffs on Indian goods will be set at 10% under the latest global tariff order issued by the White House, with the new rate taking effect on February 24th as per government sources. The executive order that would have been reduced India's tariffs on 25% to 18% was not released by the US at the time of the Supreme Court hearing. UPL approves a major composite restructuring scheme that will carve out its entire crop protection business into a new standalone entity. The move consolidates both the India and international crop protection verticals into a unified platform called UPL Global, which will be independently listed on the Indian stock exchanges. Market ends higher. Both the benchmarks end around 0.5% higher after swinging between gains and losses. Broader indices underperformed, sectors close mixed. Hello and welcome. This is Profit 360 on NDTV Profit, and I'm your host Gargi Shetty. Along the next half hour, we'll bring you the latest on markets as well as the national and international news. So let's start with the big news of the day. The US Supreme Court last night took the historic decision to strike down Trump's tariffs. However, this has not deterred Trump, with the US president now declaring a new 10% global tariff to replace the one struck down. Listen in.
Effective immediately, all national security tariffs under Section 232 and existing Section 301 tariffs, they're existing, they're there, remain in place, fully in place, and in full force and effect. Today, I will sign an order to impose a 10% global tariff under Section 122 over and above our normal tariffs already being charged. And we're also initiating several Section 301 and other investigations to protect our country from unfair trading practices of other countries and companies.
And moreover, US President Donald Trump has reiterated that the trade deal with India remains intact, stating that India will continue to pay tariffs under the agreement. Let's listen in.
Nothing changes. They'll be paying tariffs, and we will not be paying tariffs. Our deal with India is they pay tariffs. This is a reversal from what it used to be, as you know. India, and I think Prime Minister Modi is a great gentleman, a great man, actually, but he was much smarter than the people that he was against in terms of the United States. He was ripping us off in India. So we made a deal with India, and it's a fair deal now, and we are not paying tariffs to them, and they are paying tariffs. We did a little flip.
Now moving on to a corporate development, UPL has approved a composite demerger to carve out its crop protection business into a separately listed entity, UPL Global, aiming to unlock value and sharpen capital allocation. Now, while revenue and margins improved in Q3, net profit saw a sharp decline on base impact. Ajay Joshi, founder of Ajay Joshi Chemicals and a chemical sector expert, joins us to decode the strategic implications. So Ajay, let's start with the basics. How significant is this restructuring for UPL from a long-term strategic perspective?
Yeah, good day, Gargi. I think it's a good move, and UPL is following the footsteps of global chemical companies. They have also been carving out their agrochemical business separately. If we look at globally, BASF, which is the largest chemical company in the world, it is also planning to carve out its agrochemical business. Then Corteva, which is also one of the top crop protection company, is carving out its seed business and segregating its crop protection business. So I think it's a good strategic move from UPL to unlock value of its each business units. Now, how it is structuring. So there will be now 3 companies coming out of UPL. So one is, of course, Adventa, which is the UPL seed business. Adventa IPO is anyway due. They have filed the DRHP. But now India crop protection business, which was earlier known as UPL Sustainable Agri Solutions, will merge with UPL's global crop protection business. And let's call this UPL1. This will also get listed. Of course, there also will be a third company, which is UPL Limited as it is, but UPL Limited will be holding stakes in Adventa, the seed company, as well as UPL1, the newly listed crop protection company. So I think very good strategic move from UPL to unlock the value. And later on, UPL also happens to have a specialty chemical business, which is very small at present. So with UPL, too, they can also unlock that value also for the shareholders.
Ajay, you said that it's a very good strategic move, but I just want to ask you that why is it venturing into a separate crop protection now? Is it because markets were undervaluing the business? Is that why? I'm just trying to understand.
Okay. See, before COVID, there was a wave of consolidation in the global agrochemical space. So we saw Bayer, Monsanto, we saw Syngenta, Chem China, because things were not going well. But now the market sentiments are positive. As well as what we are seeing from China, also there are a lot of supply restraints in agrochemicals. So it is good time for UPL to restructure its business and utilize its global presence, because they do have assets in the Southern American market also. They do have assets in India also. So it will be a good move to make UPL a pure play crop protection company. Right now, it is a crop protection, a seed, as well as a chemical company. But with this demerger, with this segregation, they will become number 2 in the world pure play crop protection company. So I think this will give them more domain focus expertise, and it will also be good for the shareholders.
Right, and say UPL Global does become the world's second largest listed pure play crop protection company. What kind of valuation multiple can it command?
See, if you look at their peers, of course, see, I can't comment more on the financial side because I cover more on the business, but definitely they will be benchmarked against BASF India. So BASF India could be their benchmark once this entity separates.
Right, and according to you, what are the biggest execution risks in this whole 12 to 15-month restructuring process?
I think global agrochemical cycles as well as the business sentiments. Right now, the business tailwinds are in favor of UPL. Like I said, China supply restriction and agrochemical season this year. We hope that the monsoon will be better, plus regulatory risks and all that. But all in all, I do not see much execution risk here for UPL, at least for this deal. I think they are in a very safe position.
Right, and with such a big deal, who do you think is benefiting more at this point in time? Long-term investors or short-term traders? What's your take on this?
I think the value creation will be long term only, because this deal itself will take time, 8 to 12 months minimum. They need to take a lot of regulatory approvals, a lot of policies they need to adhere to. We might also see, Gargi, this I'm sharing first time with your viewers also, we might see UPL making some more business restructuring, selling some part of formulation business, acquiring something. We might see some inorganic M&A activity also in between from UPL. So I think it will be a long-term game.
Right, and do you expect the institutional interest to increase post-separation or not? What's your take on that?
Definitely, it will increase. Like I said, it will become a pure play crop protection company. So they will be benchmarked against the likes of Syngenta, against the like of FMC. So definitely interest will be increased.
Right, and I think this raises a bit of an interesting question. Do you think this is more of like a value unlocking or is it more of a value shifting? Can you go into a little in depth about that?
See, for crop protection business, the new entity merging India crop protection and global, it is value unlocking. But the UPL Limited, which is the existing company listed on the market, for I think that kind of then becomes, I think, in my opinion, it has no value then. It will be just like, a godfather company having some stakes in the other two companies. But the real value will be coming in from the newly generated UPL crop protection.
Right, Ajay, I'll ask my final question to you. Should investors now expect higher EBITDA multiples compared to the current consolidated UPL?
Or slightly better, but not something phenomenal in the crop protection. Because in crop protection business, I don't see EBITDA margins going higher, but definitely the Adventa IPO, which is UPL's seed business IPO, there people can invest very good EBITDA margins going forward.
Right. Thank you so much for joining us, Ajay. And viewers, moving on now, global oil markets are entering a volatile phase. The IEA warns that supply will outpace demand by nearly 4% in 2026, even as global consumption grows by only 850,000 barrels a day. But geopolitics is keeping prices elevated. Crude recently hit 6-month highs on US-Iran tensions with a small $4 war premium still built in. Now, despite a bearish long-term outlook, crude has surged nearly 18% so far this year. Meanwhile, Washington is facilitating India's talks with Venezuela to help New Delhi diversify away from Russian crude, backed by a major US tariff cut for Indian goods. Now, US envoy Sergio has said that the United States is in active negotiations with India over the potential sale of Venezuelan oil. Now, according to him, the move aims to help India diversify its crude oil supply sources. Now, meanwhile, MEA spokesperson Randhir Jaiswal has also indicated that India is open to importing oil from Venezuela, provided it is commercially viable for India. Listen in to what they had to say about this.
On the oil, there's an agreement. I also don't want to be given out too much in the sense that what private conversations happened occurred between the two leaders. We have seen India diversify on their oil. There is a commitment. This is not about India. The United States doesn't want anyone buying Russian oil. The president has been very clear on this. He wants this war to end. And so anyone who is, in a way, still involved with that conflict is something that the president wants to see come to an end in hopes of peace coming with that. On the first part of your question, that is also, there's multiple mechanisms. It's not one executive order. So that is making its way through the pipeline. The executive order specifically on oil was already signed.
On both Russian oil and on Venezuela oil, we have issued statements. We have made our position very clear. So I would once again request you to look at what we have said in the last few weeks on both these subjects. On Venezuela, we had said that if it is commercially viable, then we can explore buying oil from Venezuela.
And at ANMI Stock Tech 2026, the NSE outlined its next technology leap, announcing nanosecond response times that will make it among the fastest exchanges globally. My colleague Sharath caught up with Sriram Krishnan, Chief Business Development Officer at NSE. Listen in.
Sriram, a lot of technological innovations are happening. How is NSE going in this? We are talking about AI agentics also, and of course the growth layer coming in. So give us a technical perspective.
See, NSE has always been known as the pioneer as far as technology is concerned. We've revolutionized the marketplace in India for sure by democratizing the trading preferences, and the country has taken to NSE in a big way in the last 3 decades. So if you look at what's happening now, this is another wave of evolution in many ways. And just like what we have done in the past, if you look at the first 10 years of NSE, we had digitalized the entire physical share certificate framework that existed at that time. In the second 10 years, we have brought in equity derivatives. Again, technology helped the popularization of equity derivatives, because that's a product which cannot work without technology and high-speed technology.
Right, but Sriram, the way the history has changed, now AI has also come in.
Yeah.
We are talking with a lot of brokers, they are coming out with new technological products. Retail is also coming in the algo segment. How do you see the future going, and what are the risks involved and the safeguards also, because we are moving towards AI and automation?
See, in the last 10 years, regulators have taken a number of steps. For example, they have built a good cyber resiliency framework which the entire ecosystem has to adhere to. There are frequent inspections to make sure that checks and balances are in place. Also, NSE has adapted to the changing operating environment. For example, we have created a massive number of racks for those who want to be in the co-location, and that number is increasing all the time. So in fact, we have moved our employees away from the main NSE office, which is going to become a full-time data center in some time. So that's one important change. Also in the last decade, with the advent of retail platform providers, we have introduced APIs and integrated them with the ecosystem in such a way that retail customers can have the same kind of experience, speed, latency, call it whatever, right? The same set of qualities are available also to retail customers.
And Sriram, just for the retail viewers who are hearing our interview out, and even the brokers, what is the new technological advancement which NSE might be introducing the next 6 to 8 months?
So we've just announced yesterday nanosecond responses effective April this year. What this means is that we are going to the next level in terms of the speed with which you will get an acknowledgement from the exchange for every order that hits the exchange. And we are going to be the fastest in the whole world. on this parameter. And retail algos are coming out as well. They have been approved by SEBI some months back. They are going to go live in some time. So these are exciting new opportunities which will lay the foundation for the new world ahead, where AI will also dominate and play a different role in terms of people understanding the big data and making their conclusions in a very, very easy way. And that will probably see a big number of retail participants coming in further compared to what we have seen up until this point in time.
Now, along with that, the focus was also on how technology is reshaping the stockbroking industry. Sharad also spoke with Arjun Shah, Chairman WIRC at ANMI, on what this means for brokers and whether AI is a threat or an enabler. Listen in.
Arjun, question is on this important report which you have released, what are the key takeaways? I think it's regarding the technology and what it means for the brokers. Could you just give us the important snippets about it?
So, as services move towards to being more customer centric, and it's all about the user experience. Now, for a stockbroker to provide that to the end client, they need to invest in technology to automate, make more personalized solutions for the clients, and to also educate the client as to where more about the financial products and the industry. So for this, a substantial investment in technology is required, and the stockbroking industry is racing ahead, essentially, from what we find in the report, to make new investments, aggressive investments into the field of IT, in terms of procuring softwares, hardware, recruiting talent. We see that there is a lot of, globally, we're seeing a lot of innovation happening in terms of AI and the use of AI in the financial products. So overall, we see a broad trend, a multi-year trend, an accelerating trend, wherein we are seeing stockbroking industry make further and more investments into the IT.
And Arjun, there is some concerns also which come in. That is definitely going to be on the AI agents which have come in. Will they kind of eat up the stockbrokers' business, or some kind of issues happens? There is a concern. Any technological trends which you are gathering?
So, this is my opinion, that these are tools. The way once upon a time, back in the day, Excel was a tool, AI is a tool. It is always going to be the human innovation and the ingenuity that is going to drive the tool. So AI is an enabler of sorts. It is not a replacement. So it's how you drive the tool is what gives you the end result and the experience.
And now for an update on the US SC ruling, India has formally responded to the court's judgment on tariffs, saying that it has taken note of the ruling as well as the subsequent remarks made by President Trump. The Commerce Ministry confirmed that it is closely studying the judgment and the steps announced by the US administration to assess their broader trade and economic implications. Now, officials indicated that the government is evaluating how the evolving US tariff framework could impact bilateral trade flows and ongoing discussions between the two countries. For now, New Delhi's stance remains measured, with a detailed assessment underway before any policy response. And in an exclusive interaction with NDTV Profit, Tata Steel MD and CEO TV Narendran said it is too early to react to the US Supreme Court developments around Trump-era tariffs, adding that companies are unlikely to alter plans. My colleague Danish interviewed TV Narendran, MD and CEO Tata Steel. Listen in.
Well, we have been joined by Mr. TV Narendran, is the MD and CEO of Tata Steel. So many thanks for speaking to NDTV Profit. The world has woken up to a very different news. The Supreme Court of the United States has struck down Trump's tariffs. How do you look at the entire scheme of things?
A bit early, I think, to react, because we are still trying to understand the details of it. The devil is in the detail. So, but let's wait and see. I mean, from an Indian economy point of view, I think obviously the fact that we are having a trade deal with the US is very positive. And what I heard from, what I read is that this is not going to impact it negatively in any way. I think that's good. So, let's wait and see what happens.
Right.
Yeah?
So with that, we are also seeing that the overall tariffs that were supposed to kickstart on India, it was 18%, and now it has come down to 10% with the latest notification coming out. So definitely it is a boost for us. But how do you look at this? Which sectors can get a major boost?
I think what we need to also realize is these things are changing quite rapidly, right? So I don't think any company is going to change plans which are based on this situation, because you don't know what's going to be announced after a few days or a week or so. I think the larger point is maybe the president will have less flexibility now to kind of impose tariffs like he's done in the past. Maybe that will lead to a little bit more stability. But having said that, particularly for the manufacturing sector, I think you can't take decisions based on daily announcements. I think we'll always wait and see what is there. But I think overall we are moving in the right direction as far as India and US is concerned.
Right. And so very lastly, the CBAM mandate is also there. You are the steel producer. You will be affected the most by it. So are you in talks with the Indian government so that the Indian government and EU can talk about it and, there's some kind of a cushion for our steel sector?
So, as you know, Tata Steel has a fairly large operation in Europe as well, right? So, in some sense, we understand CBAM deeper because we experience it. CBAM is, to me, an equalization tax. It's if you're paying a carbon price in Europe, the expectation is when you sell steel in Europe, you'll pay the same carbon tax. So, from our point of view, we don't sell much steel from India to Europe. We produce steel in Europe. So from that point of view, I think CBAM is positive for Tata Steel because it equalizes the tax that we pay in Europe. And so we are not negatively impacted by CBAM.
Right.
That's all the time we've had on this edition of Profit 360. But do stay tuned to NDTV Profit for more news and updates.